BRICS nations' effect on the U.S. economy. The abbreviation BRICS, which stands for Brazil, Russia, India, China, and South Africa, represents a powerful alliance of developing nations that significantly impacts the global economy. Since its founding in 2009, this bloc has grown rapidly, controlling a substantial portion of the world's population and GDP. Their combined economic growth and policies profoundly influence trade, investments, and job markets worldwide. Stay tuned to learn more about the extraordinary dynamics and influence of these countries. U.S.-BRICS trade ties. Trade interactions between the United States and BRICS nations are pivotal in understanding their economic interdependence. China, as the largest economy within BRICS, stands out as a major trading partner for the U.S. The economic relationship between the two countries is characterized by a complex exchange of goods and services. The U.S. exports a diverse array of products to BRICS countries, including agricultural commodities like soybeans and corn, advanced machinery, and cutting-edge technology. These exports help American businesses tap into growing markets and generate significant revenues. Conversely, the U.S. imports a wide range of products from BRICS nations, including electronics, textiles, energy sources, and manufactured goods. For example, China is a major supplier of electronics, including smartphones and computer components, which are crucial for the American consumers and businesses. This two-way trade not only enhances economic ties, but also influences global trade patterns, showcasing the robust business relationships between the U.S. and BRICS nations. Impact on the U.S. economy. The trade relationship between the U.S. and BRICS countries has several notable implications for the U.S. economy. Firstly, trading with BRICS nations expands opportunities for the American businesses and opens new markets, promoting economic growth in the U.S. This growth fosters job creation in manufacturing, agriculture, and technology sectors. Secondly, American consumers benefit from a wide selection of reasonably priced goods imported from BRICS countries, often lowering prices in local markets. Additionally, technology and expertise transfer is a common component of investments between the U.S. and BRICS nations, further enhancing economic ties, economic growth, and global influence. The rapid economic growth of BRICS countries has dramatically reshaped the global economic landscape. China, the world's second-largest economy, leads this trend with its unprecedented economic expansion and influence. The country's growth trajectory has significant implications for global trade and finance. China's rise as global economic powerhouse has led to a realignment of international trade routes and investment flows. Russia, with its vast oil reserves, plays a pivotal role in global energy markets. The country's energy exports influence global oil prices and impact energy-dependent economies, including the U.S. Brazil, rich in natural resources, contributes significantly to global agricultural and mineral markets. India's booming IT and services sector has positioned it as a key player in the global digital economy. South Africa, although the smallest economy within BRICS, plays a crucial role in representing African interests within the bloc. Its contribution to the group's economic agenda and development projects are instrumental in promoting the continent's growth and integration into the global economy. The combined economic expansion of these nations has established them as major drivers of global development. Their growth has altered global trade patterns, creating new opportunities and challenges for economies worldwide. BRICS Development Bank. In an effort to support infrastructure and sustainable development projects, BRICS countries established the new Development Bank, NDB. The NDB aims to provide funding for projects in member countries and other emerging economies. One of the bank's key innovations is its use of local currencies for financing, which reduces reliance on the US dollar. By promoting the use of BRICS currencies in international trade, the NDB has the potential to shift global financial dynamics. This move could impact the value and stability of the US dollar as BRIC currencies gain prominence in global transactions. The gradual shift away from the dollar-dominated transactions may lead to the exchanges and exchange rates. affecting the competitiveness of U.S. exports and the cost of imports. Investment flows. Foreign direct investment describes the acquisition of assets such as companies, real estate, or stock by a foreign corporation in another country. Investment flows play a significant role in the economic ties between the U.S. and BRICS nations. BRICS countries have made substantial investments in the U.S., particularly China, which invests heavily in sectors like manufacturing, technology, and real estate. The U.S. has also invested in BRICS countries, focusing on industries such as finance, energy, and manufacturing. These investments highlight the deep economic connections and mutual benefits between the U.S. and BRICS nations. Benefits and challenges. The U.S.-BRICS trading relationship presents a range of benefits and challenges. On the positive side, increased market access and economic growth opportunities enhance bilateral trade. The expansion of trade agreements and investment fosters a mutually beneficial economic environment, contributing to the job creation and innovation. However, challenges also arise from this complex relationship. Trade imbalances, particularly with China, have been a point of concern. Persistent trade surpluses on the part of some BRICS countries can lead to a job loss in certain industries and raise questions about the competitiveness of domestic manufacturing. Intellectual property rights issues, especially with China, pose ongoing challenges for the American businesses. Violations of patents, trademarks, and copyrights can impact innovation and economic growth. Currency fluctuations, influenced by BRICS' efforts to promote alternative global reserve currencies, can also pose challenges for the U.S. businesses engaged in international trade. Changes in exchange rates can impact the cost of imports and exports, affecting the trade balance and overall economic stability. Role of the U.S. dollar. Historically, the U.S. dollar has been the world's primary reserve currency. However, BRICS nations, particularly China, Russia, and India, have shown a desire to promote alternative currencies for international trade to reduce their reliance on the dollar. Bilateral trade deals using BRICS currencies instead of the U.S. dollar could impact the dollar's demand and value. Changes in preferred currencies among BRICS nations may cause exchange rate fluctuations, affecting import prices and competitiveness of U.S. exports. These fluctuations can influence the trade balance between the U.S. and BRICS countries, potentially leading to surpluses or deficits. Geopolitical disputes. Geopolitical factors play a significant role in shaping economic ties between the U.S. and BRICS nations. Trade tensions, tariffs, and geopolitical conflicts can impact the stability of economic relationships. BRICS nations often advocate for changes in global governance and institutions, influencing international policies and agreements. For example, geopolitical disputes involving Russia, such as the ongoing conflict in Ukraine, have affected U.S.-BRICS relations. In response to Russia's actions, the U.S. imposed economic sanctions, impacting the trade relations with BRICS countries, particularly Russia. While BRICS nations have not fully endorsed Russia's actions, they generally advocate for diplomatic resolutions to conflicts, which can lead to diplomatic tensions with the U.S. BRICS nations' strategies for economic independence. The BRICS nations have increasingly pursued strategies aimed at reducing their economic dependence on traditional global powers, particularly the United States. This includes efforts to establish alternative financial systems and institutions, such as the New Development Bank, which aims to provide funding in local currencies rather than relying on the U.S. dollar. These countries are enhancing intra-BRICS trade and investment to strengthen their economic resilience and autonomy. By promoting the use of their own currencies in international transactions and investing in regional infrastructure projects, BRICS nations seek to build a more self-reliant economic bloc. These strategies not only aim to bolster their own economic stability, but also to shift global economic dynamics in their favor, challenging the historical dominance of the U.S. in the global financial system. Emerging BRICS alliances and global impact. In recent years, the BRICS nations have increasingly sought to forge new alliances and partnerships beyond their traditional sphere. For instance, they have expanded their collaboration with other emerging economies through initiatives like the BRICS Plus Group, which includes countries such as Indonesia, Turkey, and Saudi Arabia. These expanded alliances are aimed at creating a more inclusive global economic system and counterbalancing the Western-dominated institutions. The growing network of the BRICS partnership is influencing global economic policies, trade agreements, and diplomatic strategies. This expansion not only enhances the collective bargaining power of BRICS nations, but also reshapes international economic relations, creating new opportunities and challenges for established economies, including the U.S. As these alliances gain traction, they could significantly alter global trade patterns and investment flows, underscoring the evolving influence of the BRICS bloc on the world stage. Challenges. Several challenges characterize the U.S.-BRICS economic relationship. Trade imbalances, especially with China, have raised concerns about the sustainability of economic growth and the competitiveness of domestic industries. Intellectual property rights issues remain a contentious topic, particularly with regard to patent and trademark violations. Currency fluctuations, influenced by BRICS' efforts to promote alternative reserve currencies, can challenge U.S. businesses engaged in international trade. These fluctuations impact the cost of imports and exports, affecting trade balances and overall economic stability. In conclusion, the economic relationship between the U.S. and BRICS nations is complex and multifaceted. The growing influence of BRICS countries, their economic expansion, and geopolitical strategies significantly impact global trade, investment flows, and currency dynamics. Understanding these dynamics is crucial for assessing the broader implications of the U.S. economy and global economic stability. Thanks for watching. Subscribe for more informative content.